Good afternoon, students. So today we plan to cover this new chapter, which is about audit of banks. I would say quite typical in terms of the requirements. Why it's quite typical? Because it's very specific about the banks. Okay, so therefore, in relation to the audit of banks, some of the things which are associated with the banking industry become important for one to understand. Yeah. So now, as regards the bank, I'm sure around the bank you must be familiar as to what the banks are required to do, how the banks are required to get into their financial reporting, what all compliances they are subject to. Why? Because if you talk about banks today, so banks are subject to some stringent regulations. Okay, and those regulations are quite extensive. Why? Because there are a lot of laws and regulations which will apply to them. So let's try to understand the background of the bank as to why you see all of these things, particularly in case of banks. Because unlike a company which is, say, into the manufacturing business, or you'll say a company which is into, say, trading business, so this particular industry is heavily regulated. Yeah, so that's what you see in case of a bank. Okay, now in case of a bank, there are some peculiar features. Let's try to understand around those features. Okay, what are those features? What is so specific in case of a bank? One, when you deal with a bank, or you must have seen in case of a bank is all about a large entity. Yes or no? Okay, so you'll not see a very small type of bank having some operations. Correct? So I'm not saying that the banks cannot be small in size, but if you look at a small company, okay, in terms of any business, even if a bank is small, that will be significantly bigger in size as compared to any other company that you get to see. So they are quite voluminous in terms of the transactions. Correct? Yeah. So on a daily basis, there must be some hundreds or thousands of lakhs of transactions going on. Further, another very important thing which you find in case of a bank is about the information technology. Yeah, so the IT environment for the bank or for a banking company, you will find is quite significant. And there are again reasons for that, because banks work on a real time basis. For example, if you, let's suppose, withdraw cash, okay, you go to an ATM, you withdraw cash or do a transaction through a debit card or a credit card, so immediately your balance gets updated. Yes or no? So the moment this transaction takes place, if you look at your balance, this gets updated immediately. So what is this immediate updation? And what is this entire system which is controlling this operation of bank? That is all about IT. Yeah, wherein information is available on a real time basis, wherein any sort of update is happening on a real time basis as far as transactions are concerned. Correct? So this is again very important. Why? Because otherwise it will be very difficult for the bank to run their business, control their business. Yeah, because the nature of their operations are such. Yes or no? Further, If you look at the nature of the business of a bank, what is that? So what will you say about the nature of a business of a bank? Any thoughts? So what is the business which the banks do? If you have to just simply put it down, say in a summarized manner. So how will you define the nature of the business of a bank as? Over to you. Any thoughts? Any thoughts? How will you define? Okay, great. Shreya says dealing with money. Priyanshi says exchange money and help the other businesses. Okay. Julie says saving money, granting loan. Then Prem is saying deposit or lending. Yeah. So you are very much there. So in a very broad manner, if we have to discuss the bank in terms of the business, then what is the business? Bank will accept money, yeah, which means they will accept loans, they will accept deposits from other parties. So how do you give any deposit to a bank? When you open a savings account, yes or no? So you are giving some money to the bank. When you open a current account, when you invest into a fixed deposit with the bank, all of these are what? All of these are nothing but the monies which are received by the bank. Correct? Now, as regards this money which you provide to the bank, what will happen? Bank will have to pay some return on that. Yes or no? Yeah. So, of course, you'll say that the bank will be providing some services, which is fine. But in relation to the money which the bank will receive, what will the bank do? Bank will provide some return on that, which is called as interest. So when you have a savings account, you get interest on that. When you do a fixed deposit with the bank, you want interest on that. Correct? So that's how the things are looked at. Now, this money which the bank would receive, okay, which the bank would have accepted, whether it's in the form of deposit or loan, otherwise, okay, so whichever mode is available to the bank in terms of accepting the money, what is the next step which the bank will do? Bank will also give this money to some other parties. Yeah. So there could be some persons looking for a loan. There could be some corporates looking for a fund or a loan. So where do they go? They will reach out to the bank and the bank will give the same money which the bank would have received from the customers to all of these parties. Yeah. Who happen to be the customers of the bank. Correct. So they will be the customers of the bank. Yeah. So that's what the bank will do. And now, because the bank will give some loan or advance, or you can say any money to a third party. So here again, what will happen? Now the bank will charge interest from those parties. Correct? Now the bank will be charging interest from those parties. So that's how the operations of a bank will be done. Again, broadly, yes or no? Now, in this case, let's try to think about a bank. If let's suppose there's a bank which is taking money from a customer or a party, paying them some interest, and the same money is the bank given by the bank to a third party, and the bank is earning interest on that. So one may be thinking that how is the bank going to get benefited due to this? Because the bank is taking the money from one person, giving the same money to another person. So any thoughts? So why would the bank be involved in this activity? How does it really help the bank? Tell me quickly. Any thoughts? So why would the bank get into this activity? Great. Priyanshi says because the bank will earn interest, but at the same time, bank will have to pay interest. Shreya says bank will earn more interest on the loans given. Very good. Yeah. So Tanu says this is how they make money. Okay, which means that the money which the bank will give to a third party, okay, will fetch the bank higher interest as compared to the interest which the bank will be giving to any other party. For example, when you have a savings account with a bank, okay, so what is going to be the interest rate? Say, for example, 4%. And if the same money is given by bank to a company or to a party as a loan, so the bank may be charging, say, 8% or 9% as the interest rate. Yeah. So this differential in the interest rate which the bank is getting, where is this utilized? For various administrative operational costs of the bank. That's one. And on the top of it, to make some profit. Because that's the objective eventually. Yes or no? Now, in this case, see, because the nature of the bank is such that public is involved at large. Yes or no? So that's why you can say bank is what? Bank is nothing but a public interest entity. Yeah, because people have heavily invested their money in the bank. Yeah. So tomorrow, if there is any problem in a bank, who will suffer? All those persons who have invested their money in the bank. Yes or no? Yeah. So that's why, considering the nature of the business which the bank is into, considering the public interest which is involved, which is attached to the bank, which will be attached to any bank, they are required to be regulated. Okay, that's where you see stringent regulations in place. Or you can say that's where you see a need for stringent regulations in case of a bank. Understood? Yeah. As to why there will be so much regulations. Okay, we'll talk about it. As to, in case of a bank, as to what are those regulations. Okay, and when you're saying the bank is heavily regulated, so what does it mean? Yeah, so what all regulations are applicable to bank? Now, this was briefly about an understanding of the bank as to how do they operate, what are some of the features which you'll generally see in case of a bank. You can just simply say that it's an entity wherein the public interest is involved. Okay, and any entity where the public interest will start getting involved more and more. So what will happen? Regulations will increase. And that is quite natural. Yeah, that is quite implied as to why that has to be there. Yes or no? Yeah. So you can understand as to why this need will arise. Right? Now, Let's talk about banks. Now, in relation to the banks that we discuss, banks are of various types. So if you look at a bank, they are of various types. Commercial banks, cooperative banks, regional rural banks, payment banks. So all of these are what? They are the different types of banks. Now, why do we have all of these different types? That is dependent on the purpose for which these banks have been set up. So one may say that depending on the purpose, depending on the objective of that particular bank, okay, you have got various categories. So now, it's important for us to understand as to, what could be the various purposes for which you may have different categories of banks. Correct? So let's get into the details of all of these banks in terms of the categories one by one. And let's try to get some thought process, okay, as to what is it they are trying to achieve, why all of these have been set up, why do you have all of these categorization. Commercial bank. First, you can say the most common one, which I'm sure you will also be familiar with. Yeah, they provide number of products, number of services to general public. They accept deposits, and the same money is then given as an advance to various other parties, something that we just discussed. So in the normal course, okay, all of these discussions that we have had so far, you'll say that this has been in the context of commercial banks. Okay, then you have regional rural banks. So these are the ones which are set up in rural areas. And what is the objective? To cater to the banking needs. Now, what are the banking needs? Same way, but specifically for rural communities. For example, if you have heard about these type of banks, Punjab Grameen Bank, okay, Tripura Grameen Bank. So these are all, you can say, the banks which are which are considered as regional rural banks. Why? Because they have been set up in the rural areas. So you'll not find these banks in the, you can say, non-rural areas, in the urban areas. Okay, then you must have heard, again, this is very common, cooperative banks. This is again very common. Okay, in fact, many a times you get to see there's some problem in the bank. Okay, one of the bank has gone, shut. Okay, or maybe the bank is now getting sort of liquidated. Most of the time you see such examples are there in respect of cooperative banks. So let's understand this. See, these banks, once again, they function like commercial banks, but are set up on the basis of cooperative principles, and they are registered under the Cooperative Society Act of the respective state. And they usually are set up to cater to the needs of agricultural and rural sectors. Okay, so you can say some communities are defined to which they are going to serve the banking. Of course, the objective will again be the banking services. So we are not saying that they will be providing some different set of services, banking only. But again, it's specific to, you can say, some of these sectors. Then, if you look at the examples, you may have Chhattisgarh Rajya Sehkari Bank, Gujarat State Cooperative Bank. They're numerous. Okay, they're numerous. Then you have this new thing, which I'm sure you must be knowing about, payments bank. Any thoughts? Payment banks, have you heard about it? Quickly, anyone, any understanding about the payments banks? Over to you. It's not something very old. Payment banks, you have not heard? No? Now, payment banks are what? Okay, Shreya is saying yes. I think for everyone it's not very common. For example, Paytm Payment Bank. Yes or no? Yeah. Airtel Payments Bank. Correct? If you go back in time, they are not very old. Of course, they are old, but not very old, not as old as various other banks that you get to see. Yeah. So that's the difference in respect of these type of banks. So what are these payment banks? They are allowed to accept restricted deposits. Okay, means they cannot accept a significant amount as deposits. There are some restrictions which are placed on them. But they cannot issue loans. They cannot issue credit cards. Okay, so they can, of course, provide some limited services. What are those services? A customer can go open savings account, current account. Okay. In some of the cases, you also find this facility of ATM cum debit card. Okay. Generally, you find this facility of mobile banking. Yeah. So this is more about the online banking facilities which they provide, and they also offer a good rate of interest as compared to other banks that you'll have. Okay, so that is another feature that you find in case of payments banks. Clear? Next, development banks. Then you have these development banks. Now, as the nomenclature says, these banks, their objective is what? To provide funds for infrastructural facilities, okay, which is important for economic growth of the country. Now, here again, you may be thinking, but sir, if you go to these development banks, for example, IDBI, can you not go and open your savings account, current account? Yes, of course, you can do that. But see, when you look at a bank, when you look at the operations, when you look at the objectives, okay, so the banking objective is not considered on the basis of the deposits, savings accounts that a bank opens. That is not considered on the basis of whether a bank can open current account or not. Okay, that is always considered on the basis of the purposes for which the bank can advance monies, sectors to which the bank is supposed to provide those advances. Okay, so every time if you have to categorize a bank, if you have to look at the purposes of a bank, So you will not be looking at the monies which the banks will be receiving, but you will be looking at the monies which the banks has been giving. And that money will be in the context of the objective for which the bank can provide, or the sectors, or you can say the parties to which the bank can provide. So that's how one always needs to look into. Understood? Because in most of these types that you have discussed so far, you may be thinking, sir, all of these banks can accept money through a savings account. So how come we say these are different? Understood? Yeah? All right. So then we have another category which has also become quite popular in the recent past. Okay, this is again not very old, but this has become quite popular in the recent past. And what is that? Small finance banks. Now here again, what is the objective of these type of banks? See, these banks, they have the objective of what? To provide basic banking facilities to the unorganized sectors. Okay, particularly small and micro business units, small marginal farmers. Okay, so that's the objective. In fact, in some of the cases, some of these specified banks, they have got a limit up to which they can provide a loan. So beyond a limit, they cannot provide a loan. In some of the cases, they have a restriction that only to these sectors they can provide the loan. So they are not free to provide loan to anybody. Understood? Yeah. Now, some of these small finance banks, which I told you have become quite popular in the recent past. Equitas you have, AU you have, then Utkarsh you have, Ujjivan. Yeah, so there are a lot of examples of small finance banks these days. But earlier, they were not so popular. Now, anyways, because the economy is improving significantly, wherein the role of a banking is quite important. See, for any economy to grow, the bank has to grow, or you can say the financial sector has to grow, and that's how the economy can grow. Yeah, so that's where you see some of these things or some of these new types coming up and becoming popular and growing in terms of the size. Understood? Understood? Now, let's talk about the regulator. So far what we have discussed is briefly about the banking, as to what a bank is required to do, okay, in terms of their business. How do they really function? What all services do they work on? And again, the different categories of the banks you may get to see in India. Now, for all of these banks, there's one common regulator, or you can say there's one main regulator. What is that? Reserve Bank of India. Now, what is the meaning of regulator? Regulator means one who will oversee the functioning of the banks. Okay, who will be regulating all of these banks. So do we have any separate body for the banks? The answer is yes. And who is that body? RBI. RBI is also considered as Bank of Banks. Okay, sometimes you get to see this term. that it's like a bank for a bank. And of course, this is the central bank of the country, RBI. Now, let's try to also understand what are the responsibilities, what are the functions of RBI, because again, it's very important to understand all of these points. Okay, because that's how you will be able to get into the further discussion as around the regulations which you will find in case of a bank. So RBI remains responsible for development, supervision of constituents of Indian financial system in relation to the banks. Of course, NBFCs, they are responsible for determining, in conjunction with the central government, monetary and credit policies. They are responsible for regulating the activities of commercial and other banks. Other banks means different categories that we just discussed. Okay, some of the important functions which they play. If let's suppose currency has to be issued in the country, you must have heard a new currency has been issued, old currency is discontinued. You get to see that or not? Yeah. So new currency note of rupees 500, let's suppose, has been introduced. New currency note of rupees 100 has been introduced. Yeah. So who is the body, who is the authority behind that? RBI. Okay. Then, as around the currency issue, if there are some regulations, that's again with RBI. Okay, so it also acts as the banker to central and state governments in terms of the funds, monies, loans which are provided to them. It acts as a banker to commercial and other banks. As we discussed, RBI is also called as Bank of Bank. In fact, now when you will get into the details about the regulations to which a bank is subject to. Okay, so one of the very basic requirement for a bank will be what? To obtain a license. License means if any bank has to operate in India, or if let's suppose if any entity has to call itself a bank, so what do they need? They need a license, which is called as banking license. Only and only when that license is available, an entity can operate as a bank. Okay, well, you can say a bank can operate as a bank, otherwise not. If let's suppose there's a bank, this bank wants to open a new branch. So all of these things, whether it is about obtaining license, whether it is about opening a new branch, and whether it's also about closing a branch of a bank. Who is going to be the regulator? RBI. Yeah. RBI also has the power to inspect any bank. So what does it mean? If let's suppose any inspection is required to be done, so RBI has the power. RBI can go and inspect that bank in respect of various operations, various activities, various transactions of a bank. Okay, and this power is not limited to anything. Okay, now you may be thinking, but sir, is that all about audit? Not really. We have not really moved on to the audit as yet. We are just trying to understand various regulations, various requirements. which are nothing but the features, or you can say we are just trying to obtain an understanding about the bank. In fact, some time back we had a discussion that for an audit to be performed, and for an audit to be performed in an effective manner, understanding of the company, understanding of the industry is very important. Remember that discussion, everyone? I'm sure you would have covered that. Tell me, do you think so? That understanding is important? Why? Because if you do not understand about the company or the industry or the entity, okay, whatever be the case, you will not be able to examine anything. You will not be able to audit. Why? Because audit is all about checking what is required to be done. So till the time you don't know what the company, what the entity or a bank is required to do, how will you go and check that? Correct? Yes or no? So same goes with the auditor also. And same goes with the auditor of a bank also. That for an auditor of a bank, understanding of this entire industry is extremely important. Why? Otherwise, he will not be able to plan the audit. Okay, forget the procedures. He will not be able to do anything about it. Yeah, he will not have a clarity. And in fact, the nature of a bank is significantly different from, you can say, a trading company, from, you can say, any other service provider, from, you can say, a real estate company. Yes or no? So therein it becomes all the more important for the auditor to ensure that this entire understanding has been obtained. Correct? So you can say, in a way, we are also trying to do the same thing. So far, we have just tried to obtain an understanding about this banking as a whole. Why? Because eventually, when we get into the audit or some of these auditing requirements, so this is going to help us. Yes or no? So this is going to help us. Correct? Great. Tanu is saying yes. Shreya is also saying yes. In fact, I've received a couple of references of the auditing standards, which is good. Okay, so Priyanshi is saying some of these auditing standards 200, 320. Yeah, of course. See, in the context of a bank, of course, we'll talk about various auditing requirements as we move further. But please remember that the basic approach of the audit is not going to change. That will remain same for every type. Why? Because for a statutory auditor, whether it's a bank or any other entity, objective will remain the same. And what will that be? Financial statements reflected true and fair. Yeah. So that's the objective towards which auditor will be working. Okay. Now, in relation to a bank, another very common feature that you will get to see is about the size. Yeah, so we talked about size briefly, and also the volume of transactions. See, for a bank, transactions are voluminous. And generally, the banks you will see are spread Spread out means they are spread out across locations. Only then they will be beneficial, only then they will be able to achieve the objective. Yes or no? Now this spread of the operations of the bank, which you get to see, is in the form of various branches. Correct? So in fact, I'm sure you must have visited a bank. You must have had a lot of dealings with any bank. I'm sure you must have physically visited a bank. Correct? So now, tell me one thing. If let's suppose you are going to a bank, so what do you call it as? A branch of a bank. Yes or no? That's where you go. That's where you go. Yeah. So if let's suppose you are in Chennai, so you are going to a branch, let's suppose of HDFC Bank. Say you are in Bangalore, you are going to branch of HDFC in Bangalore. Yeah. Say you are in Chandigarh, you are going to a branch of HDFC Bank in Chandigarh. Correct? Now, this is how banks are spread out. So their spread is available in the form of various branches which they create. So they operate through multiple branches. And in case of a bank, you will not find 5 or 10 or 15 branches. They will have hundreds of branches. Okay, in fact, you look at the large banks, of course, that will be the size. And that's how they will be able to operate. They may have thousands of the branches. Correct? Now, let's talk about some of the regulations. So we talked about the regulator. The regulator means a body is there who will oversee the operations of the bank. But which all regulations means in terms of the laws and regulations which are applicable to a bank. So what are those laws and regulations? Let's try to understand. Okay. Now, before we really get on to the regulatory framework or the regulations which are applicable to a bank, let's talk about any other company. Say a non-banking company. Fine. Non-banking means let's suppose there's a manufacturing company. Fine. For a manufacturing company, what do you get to see? What are the laws and regulations that will be applicable to a manufacturing company? Any thoughts? If let's suppose there's a manufacturing company, which are laws and regulations you'll see applicable to a manufacturing company or maybe to a trading company or maybe to any service provider? Yes, quickly. Any thoughts that you may have? Quickly, over to you. There are so many rules and regulations. So Shreya is saying one is Companies Act. Okay, great. What about others? Any thoughts? Any thoughts? Quickly. Any thoughts that you may have? Over to you. Okay, Shreya says GST is second. Okay, what else? Over to you quickly. Priyanshi is saying GST. Very good. What about others? Shreya says TDS. So I think you're talking about income tax, which is also the response from Tanu. Okay, so there are a lot of regulations. Companies Act is one, income tax is one, GST is one. Yeah, then you have this PF, ESI. Okay, of course, FEMA, very good. That is again one. Then you have MSMED. Okay, in terms of their dealings with various customers. Yeah, so there are so many regulations. There are so many laws and regulations, one may say, which apply to a company. Yes or no? Now, a bank being a company, bank being in the nature of business of certain services, will you find most of these regulations applicable to a bank? The answer is yes. So Companies Act will be there, Income Tax Act will be there, GST will be there, FEMA will be there. Yeah. So of course, you will have all of these rules and regulations. So the employees of the bank, of course, if they are subject to PF, so PF will also come in, ESI may also come in. So all of those rules and regulations which you generally get to see for a non-banking company are there in case of a bank as well. Over and above that, now you may see there are so many other regulations also. Banking Regulation Act is there. For SBI, State Bank of India Act is there. Yeah, then you have this Banking Companies Acquisition and Transfer of Undertaking Act. Then you have this Regional Rural Banks Act, which is for regional rural banks. Yeah, then you have this IT Act. IT Act will anyways be there. Then you have this Securitization and Reconstruction of Financial Assets. Yeah, so all of these things are anyways there. Yeah, they are anyways there. Okay, now, in addition to that, there are various other regulations. So it's not an exhaustive list, one may say, which has been put down over here. Yeah, there are so many other rules and regulations. So one can easily understand why you see this new act coming up. New means something which was not listed above. RBI Act. So this is also applicable. Yeah. So now you may be thinking, but sir, how do we remember all of these acts? Do we need to mug up? See, idea is not to mug up. Idea is just to give some reference. Okay, have some clarity in terms of your understanding that it's a highly regulated sector. And I've also explained you the reason why it's highly regulated. Okay, why all of these regulations are there in respect of a bank. Okay, why such need is there. Okay, clear? Now, some of the peculiarities which are involved: huge volumes, complexity of transactions. Yeah, they are widely spread out in terms of geography. They've got various products and services. So if you look at a bank, they will have so many services. Okay, so savings account, current account is only one of the service. Yes or no? They will have a lot of products. So every other day, you may be receiving a call from a bank that these are our services, these are our products. Yes or no? And considering the nature of operations that they have, considering the size that they have, considering the volume that they are handling, what do they need? Extensive use of technology. We have already talked about it. Yeah. So very sophisticated IT environment is the one in which the banks are required to be placed. Otherwise, they will not be able to function. So just imagine, let's suppose you had a balance of rupees 1 lakh. Okay. Let's suppose till yesterday you had a balance of rupees 1 lakh. Okay. And this balance of rupees 1 lakh was there because you deposited some money in your bank account. Okay. So yesterday, what did you do? You deposited some money in your bank account. Yeah. So let's suppose today morning again, you have issued a check. Yeah. Let's suppose you have issued a check, say for rupees 5 lakhs. Now you understand that because you have issued a check, so that's why the bank should have a balance of rupees 5 lakhs. So that's why what do? You go and deposit say rupees 4 lakh in your bank account. Why? So that your check gets cleared. Yes or no? Now let's suppose if the bank will take 1 week or 2 days or 3 days to update the amount that you have deposited. So what will happen? So what will happen? Do you think the transactions will work in a smooth manner? The answer is no. It will become very, very complex. First, for the banks to track. Second, for the customers to track. Correct? That's why what do you have? You have this real system. Okay? Or, sorry, or system which is working on a real time basis. Because that is very, very important. Yeah. So the moment you have any debit transaction, the moment you have any credit transaction, your balance gets updated. So just imagine a situation. Say your account has got rupees 10,000. You withdraw 10,000 from ATM. Okay. And if the balance is not updated on a real time basis, so you may again withdraw rupees 10,000. So will the bank be able to track that? Answer is no. Answer is no. Yeah. Which will become very, very difficult otherwise in terms of the risks which the bank may then become subject to. Yeah. And all of this is possible only because of the fact that bank is using sophisticated IT systems. So Priyanshi is saying that for such things, bank reconciliation statements are required to be prepared. But if let's suppose banks get into their reconciliations, okay, so till the time their reconciliations are not done, if let's suppose the balances are not updated, so do you think you will be able to, do you think the banks will be able to provide this smooth flow of transactions? The answer is no, because all of these reconciliations may take time. Yeah, that's where what do you have? You have this update on a real time basis. But idea is what to understand. Idea is to understand that the banks are working on technology which is quite sophisticated. And if that system is available in the bank, it is important for the auditor to look into it. Understood? Yeah. So all of these things, why are we discussing that? Why is that important to us? Because as an auditor, till time we do not get the complete clarity in terms of the environment in which the banks are operating, we may not be able to plan our audit procedures. Yeah, which is a very, very important thing. Correct? Yeah. All right. Now, moving further. So far, we have discussed quite a lot about the banks in terms of how do they operate, how do they function, who's the regulator, what all regulations are there. Of course, it's not an exhaustive list, but some of the regulations we have looked at. Now, let's also touch upon some of the audit requirements. Okay, so let's bring in that audit aspect as well into our discussion. Now, first of all, if we have to understand about the audit, okay, so what do we need? Couple of things. We need to understand first about the requirements of audit. So let me just take you to the requirements of audit in case of a bank. So for a bank, its financial statements are required to be audited. It's similar to any other company. In fact, bank happens to be a company only. So that's why for a bank, audit of its financial statements is mandatory every year. Correct? Now, who is going to audit the financial statements of a bank? It's going to be exactly similar to what you see in case of any other company. And what is that? A chartered accountant in practice. Okay. So all the criterias which are applicable for the auditor of a company will also be there in case of a banking company. Why? Because this is also a company. Yeah. The only difference is that this company is into the banking business. So that's why some more regulations will come in, some more requirements will come in, but at least those requirements which are there in case of a company will also be available, will also be required to be taken care of in case of a bank. Yeah. So those are required to be there in case of a bank. Okay. So as regards the eligibility, qualifications, disqualifications of auditor, I'm sure you would have covered that already. Yes or no? Everyone, quickly, in your previous sessions, you would have covered that. Correct? You may not be remembering all of these points. I can understand, but you can just make a reference to this. Okay? If let's suppose you are preparing a note, so what should you do? You should create a reference over here, a reference to all of that discussion, similar to what you see in case of this material also. Correct? Now, let's talk about a bit more on this audit appointment. Of course, a lot of things are there or are similar to what you see in case of any other company. But because there are some more regulations, so that's why we can just talk about those regulations also. Okay, so some of these things for a company, like you appoint an auditor at an AGM, so that is also there in case of a banking company. When it comes to a nationalized bank, auditor will be appointed by bank concerned through its directors. Of course, RBI approval will be required in such a case. When it comes to regional rural banks, auditors will be appointed by concerned bank with the approval of central government. Okay, so some of these regulations will become specific. Next, remuneration of the auditor. So remuneration of auditor of a banking company will be fixed in accordance with the Companies Act. Remuneration of auditors of nationalized bank, State Bank of India, is to be fixed by RBI. Okay, so that is to be fixed by RBI in consultation with central government. Clear? Clear? Next. As regards the auditor, now what are going to be the powers of the auditor? So here again, please remember that because the auditor is going to audit the financial statements. Okay, so for a company, various parts which the auditor will have, and in fact various duties as well as responsibilities which the auditor will have in case of any other company will also be there in case of bank. Yeah, so please make a note of all of those points. Please don't think that all of those powers, all of those duties, all of those responsibilities are not there in case of bank. No, that is also there. Over and above that, we are looking at some of these specific requirements. So when it comes to the auditor of a banking company, nationalized bank, SBI, regional rural bank, they have got same powers as those of company's auditor in relation to audit of financial statements. Okay, which will be in respect of books of accounts, various supporting documents, vouchers, underlying agreements. Okay, so everything around that means access to all of that information, access to all of those records of the company is what the auditor will be looking at. So that should be made available to the auditor. So that's how these things are required to be looked into. Okay, clear? Any questions so far? Quickly, over to you. So there are a lot of points that we are just trying to correlate to the thing that you have already covered. Okay, and why is that so? So that it's not getting duplicated over here. Shreya is asking, sir, the government banks will not come under the bank audit. See, all of these terms that we are using, nationalized bank, that is nothing but the government bank only. Understood? Yeah, Shreya, clear? Then Shreya is asking, sir, the government audit will not come under the bank audit. So what do you mean by government audit? I couldn't understand this point. What is the meaning of government audit? So what do you mean by that? Are you talking about any specific type of audit? Tell me, are you talking about any specific aspect of audit? Okay, Priyanshi is saying, sir, audit of government bank is also covered under Chapter 9. See, there are some specific aspects in relation to the government entities. Yeah, so of course that will apply to any government entity depending on whatever you have covered over there. And that's where you need to please remember, be it a company, be it a government company, be it an NGO, or depending on the nature of type, or you can say the type of entity it is, different requirements may apply to all of those different types of entities or the companies. So something that you have covered will always be there. But over and above that, now what you are trying to do is you are now trying to deep dive into the banking requirements in relation to its audit. Okay, so over there, the discussion that you have had was not in so much detail. Now you have a separate dedicated discussion on this. So that's where you are getting into all of these details further. Okay, clear on this? Clear? I'm just hoping that you are now clear. Yeah, Dhanush, Shreya, you are clear? Priyanshi, you are clear? Yeah? Okay, great. Now, moving further. Auditor's report. Now, for the auditor's report, what I'll do is, first of all, let's try to understand what all types of reports could be there in case of a bank. Okay. See, for a bank, before you get on to these audit reports, etc., considering the structure, what will you have? You will have one corporate office, yes or no? And you'll have a lot of branches in case of a bank. Corporate office, you can also say, is the head office. Okay. Now, in case of a bank, various branches will prepare its books of accounts. Something similar to what you see in case of any entity. When you will have a lot of branches, so branches will maintain their records, branches will prepare their books. And eventually all of these branches will have to be consolidated into the main company or the company. So who will be doing that exercise? Tell me, who will be doing that exercise? Will that be done by the branch? Over to you quickly. Who will be doing that exercise of consolidation of branches, of preparing the financial statements of the entity as a whole, including the branches? Priyanshi is saying management. Of course, management will do. But what do you mean by management in this case? Means the management of the branch, management of the company. Who will be doing that? Very good. Head office or the corporate office. So that's what Shreya says. So this responsibility will be there on the part of head office. Yes or no? Yeah. Every time if that has to be consolidated, so who will be doing that exercise? Head office. Correct. So that's why, what will you have? That's why in case of a bank, you can say there are going to be two categories of audits of financial statements. Two categories. So we'll talk about those two categories. As of now, you need to just understand the structure. Okay. So this is how the bank is always structured. Yeah. So now what we can do is maybe we can take a break. And after the break, what we will do is we'll just try to touch upon those aspects. Yeah. Related to those two categories as to how the audit will be required and who all will be involved in that audit process. Okay. So I think we can take a break. After the break, we will continue on this. Yeah. Bhargav, can we continue? All right. So we are talking about the structure of a bank. So I think let's quickly try to understand. So maybe what we can do is we can just sort of create an example for this. Just give me a minute. Okay, so let's suppose there's a bank which has got a lot of branches. Yeah, so in case of this bank, say this is PQR bank. So what will you have? You will have the head office, and of course there are going to be a lot of branches. Okay, so let's suppose these are all what? These are all branches. Numerous branches are there. Okay, now for all of these branches, there will be different branch auditors. Now that doesn't mean that for each branch there will be a different auditor. For 2-3 branches, maybe a same auditor is there. But generally, what do you find? You will have a lot of auditors for a lot of branches. Yeah. So at one place, the auditors of the branches are there. What do you call them as? Branch auditors. Okay, they are called as branch auditors. So they will audit the books of accounts only of the branch. And what do? They will report the same to the head office. Now for the head office, now once again, what will you have? Head office once again will have its auditor. Correct? Head office will have its auditor. So there will be an auditor of the head office. And this auditor of the head office will be involved in two sort of activities. One, audit of head office. Correct? Second, for this entire bank as a whole, financial statements have to be issued. Yes or no? So who will be auditing the financial statements as a whole? That again will be by this auditor of head office. Okay. And this auditor of the corporate office of the head office is called as central auditor. Okay. Central statutory auditor. Of course, it's a statutory audit, so that's why you will call it as central statutory audit. Clear? So at various places, as we move further, we'll be using these terms: branch auditor or branch audit, central auditor. Yeah, so please remember this structure and the way the audit is required to be therefore performed. Clear? Everyone clear? So there will always be a difference between a branch auditor and central auditor. So the central auditor will be auditing the head office, and will also be auditing the consolidation of the branches. Clear? Yeah. So now coming back to the discussion that we were having about the audit reports. So we were talking about the audit reports. Now for a bank, different types of reports may be required. For example, statutory central auditors. Now you understand this term, statutory central auditors. So they have to furnish following reports in addition to the main audit report. Now, if you go back to the discussion that you would have had in relation to audit report. So there was a topic of audit report. Remember? In that chapter on audit report, we discussed about few audit reports. CARO, report on IFC. Okay. And therein we also discussed that one report, which is the main report or which is called as the main audit report, means the one wherein the auditor will give the opinion on the financial statements as to whether they reflect a true and fair view or not. Remember, that is what is very commonly called as main audit report. So here again, this being a company, so similar sort of report will be required here again. Yes or no? This being a company, if the auditor is auditing the financial statements of a bank, so auditor will be required to issue an opinion on the financial statements of a bank. And therefore, auditor will have to issue that audit report. Over and above that, some more reports are required to be issued. Now, what are that? One is, of course, IFC, similar to what you see in case of any other company. Okay. And if you remember, this IFC happens to be an annexure of the main audit report. Remember? Yeah. So this report on IFC, this is a report, correct? But how is that presented? It's required to be covered by section 143. So there will be a part, there will be a section in the main audit report wherein this is required to be covered. Do you remember that section, the name of that section? So there's always a section in the audit report wherein this aspect of section 143 of Companies Act is required to be covered. Can you just tell me the name of that section of the audit report? We discussed about it. Yes, over to you. Anyone? Any thoughts? Quickly. Anyone? Very good. Shreya is saying report on other legal and regulatory requirements. It's not a report actually. It's about other legal and regulatory requirements. So it's a part, it's a section of the main audit report. And in this section, there's also a coverage of section 143, subsection 3, subclause I, which talks about the report on IFC. Remember? Yeah. So now, in case of a bank, you will have that similar requirement. Okay, so that's why here again, in case of a bank, two reports you'll always find. One, main audit report. Second, report on IFC. In case of some of the companies that we were discussing under that chapter on audit report, there was one more annexure of the main audit report. Do you remember that? So in case of a main audit report, we discussed that generally there are two annexures. Okay, one annexure is of course on the IFC that we just discussed. There is also one more annexure which goes along with the main audit report. Do you remember? Anyone quickly? Great. Shreya has answered this. What about others? Quickly. What about others? Do you remember there was one more annexure? What do you call that annexure as? Where does that requirement of such annexure arises from? Over to you quickly. Great. Prem has also answered this. Shreya has answered this. That's called as Karo. Remember? Karo. Companies Auditors Report Order. Remember? Yeah. But now, in case of a bank, Karo is not applicable. Okay, so that's why you will not have that annexure in case of a bank. Okay, clear? Yeah. So idea is to just first of all move with the slave flow. Okay, so that same requirement of audit report that you would have covered in the previous chapter will continue to apply even in case of a bank. We'll have main audit report. We'll have a lot of sections in that main audit report, be it opinion, basis of opinion, modified opinion, basis for modified opinion, CAM, okay, CAM, then various other sections which are there. So same way, those will also be there in case of a bank. In fact, we'll just try to look at the actual audit report of a bank also. Okay, so we'll pick up some banks. We'll look at their audit report. Yeah, something that we did in that chapter as well. Then you'll have a report on IFC, but report on Karo you will not be having. In addition to these reports, now this is something which is now peculiar to banks. Auditor means the central statutory auditor is also required to issue some more reports. Now, what are those reports? One report is quite popular, that is called as long form audit report, LFAR. Anyone who would have done bank audit must be familiar with this. It's a very, very popular, very, very commonly used known report, LFAR. So again, it's a kind of checklist wherein a lot of requirements are there and auditor is required to comment upon that. Then there will be a report on compliance with statutory liquidity ratio requirements. So banks are again subject to some regulations. So again, you don't need to get into this SLR. What is that? How is that required to be looked at? Okay, you can just say that this is one more report which the auditor is required to issue. Report on whether treasury operations of the bank have been conducted in accordance with RBI instructions. Report on whether income recognition, asset classification, provisioning requirements which RBI prescribes, okay, whether those have been complied or not. Report on whether any serious irregularity was noticed in the working of bank. Yeah. Then further, report on status of compliance by the bank with regard to implementation of, say, certain committees. So committees may have some recommendation that this is what the bank is required to follow. So again, you can say it's a kind of compliance. Report on instances of adverse credit deposit ratio, if at all. Again, it's a part of compliance. So in case of bank, there are a lot of compliances. So only some of the compliances have been listed over here. So you should not be thinking that these are the only one. No. Again, it varies from the types of banks that you have on their specific requirements. Yeah. all of these requirements are dependent on all of those factors. Okay. Now, as regards to reports, so if you look at the reporting requirements, there are a lot of reports. But all of those reports, when you talk about all of those reports, okay, yeah, starting from this C, they are more towards the specific compliances. They are more towards the specific statutory requirements which the banks are required to follow. Okay. So you can say there are 3 reports. One is the main audit report. Or you can say there are 2 reports. One is the main audit report including IFC. Second is LFAR. These are the most common one. Okay, over which we will also try to get into details. So what we can do is, we can now briefly, okay, of course, we'll get into the details. We can now briefly touch upon the requirements of these 2 reports. Okay, only on these 2. So idea is not to get on to each and every report, some of these reports. In case of a nationalized bank, auditor is required to make a report to the central government in which he has to state the following. Now this is about the financial statements. Whether in his opinion financial statements present a true and fair view of the affairs of bank, and in case he had called for any explanation or information, whether it's been given and whether that is satisfactory. Whether or not the transactions of the bank which have come to his notice have been made within the powers of that bank. Whether or not the returns received from the offices and the branches of the bank have been found adequate for the purposes of the audit, means the information which he has called upon. Okay, so you can say this aspect is all about sufficient appropriate audit evidence in the context of returns. Any other matter which he considers should be brought to the notice of central government. Report of auditors of State Bank of India is also to be made to the central government and is also, sort of similar to what you see in case of nationalized bank. Yeah. Now, in relation to the format, now let's talk about the format. Whether you talk about central auditors or the branch auditors, okay, they need to ensure that the audit report they issue, that audit report complies with auditing standards. So do you remember the applicable auditing standard for the audit report? So there is an auditing standard which talks about the format of the audit report. Anyone who remembers that? Any thoughts? Any thoughts quickly? Something that we discussed in quite detail. Okay, so the auditing standard, if you remember the auditing standard which talks about the opinion, the main audit report. Shreya is saying there are a lot of auditing standards. Very good. SA 700 to 705. Prem is saying SA 700. Yes, that's correct. Okay, yeah. Statements. So in case of a bank, can we say that such SA is not applicable? Of course, no. That auditing standard will also apply here. And that's why you need to get the reference of chapter 8 that has already been covered. So auditor should ensure that not only the information related to unaudited branches is given, but the quantification of advances, deposits, interest income, interest expense for such unaudited branches has also been disclosed in the audit report, if at all there is anything unaudited. So this will be in respect of the central statutory auditor, because central statutory auditor will be looking at the consolidation. Such a disclosure in the audit report is not only in accordance with the best international trends, but that will also help the users. Why? Because if, let's suppose, in a bank, say there are 350 branches, okay, and 20 branches are unaudited. 20 branches are unaudited. So will that not be important for the users? Answer is yes. So this information should therefore be included. Auditor of a banking company is also required to state in his report matters covered by section 143. Okay. Yeah. But in this context, please remember, as far as CARO is concerned, CARO doesn't apply to the banks. Yeah. Okay. Dhanush has a question. Dhanush is asking, sir, what it means information related to unaudited branches? It means, like I just give you one example for this. Okay, in fact, let me just go back to that structure we discussed. Hopefully, you will be able to get more clarity through that. Okay, so in this case, let's suppose there are a lot of branches. Okay. All of these branches will have different branch auditors. Yeah. Let's suppose out of these, this branch is unaudited. This branch is unaudited. Okay, maybe the audit could not get completed. Okay, so these 4 branches are unaudited. Now, who will look into whether the branches are audited or unaudited? HO. As far as management is concerned. But whether the branches are audited or not, will those branches be consolidated in the financial statements of the bank? Tell me. Irrespective of whether they are audited or not, will those be included in the financial statements of the bank or not? What do you think? Over to you. Shreya says yes. What about others? Priyanshi is saying yes, obviously. Yeah, because for consolidation, all the branches will have to be included. Now, central statutory auditor. Now let's talk about the auditor. Central statutory auditor. What is his responsibility? To audit HO. So he will audit HO. And then to ensure all of these branches are consolidated. So he'll also ensure that all these branches are consolidated. But if there are some branches which are getting consolidated and which have not been audited, so is that not important for the users of the financial statements to know about it? What do you think? Is that not important? What do you think? Is that important or not? Will you consider it important? Tanu says yes, it's important. Shreya says yes, it's important. So that's why, who will inform the users? Will it be the branch auditor? The answer is no. Why? Because the branch auditor is giving the report to the central auditor. Yes or no? Branch auditor is not auditing in the bank as a whole. So who will have this responsibility? Who will have this responsibility? Central auditor. Okay, so when he will issue the report will specify that out of various branches, these 4 are unaudited. Okay, and what are the key items? So as we'll move forward, you'll understand that in case of a bank, key items are advances, deposits, interest on them. Okay, so those key items in relation to these branches are therefore important for the users. Okay, got it? Dhanush, clear on this now? Dhanush, you're clear on this? Great. Yeah, all right. So Dhanush is clear. Now, let me just go back. Okay, so now let's just go back to the discussion that we were having about these audit reports. Now, main audit report we have talked about. IFC we understand. Okay, briefly, of course, we'll get into the details. Huh? Don't worry. We'll get into the details, but idea is just to give you a glimpse of what an auditor is required to do, because that's when in terms of the planning, in terms of a lot of activities that we'll discuss for bank, you will be able to get more clarity. Yeah. Now, let's briefly touch upon the requirements of this LFAR as well. Besides the audit report, means besides various audit report which are meant for various statutory purposes, main audit report, then of course a lot of other reports. The terms of appointment of public sector banks in relation to the audit, private sector banks, foreign banks, their branches. Auditors are required to also furnish one more report. Okay. Now, what is this report all about? This report deals with certain matters which are specified by RBI. Okay. Now, if you look at the statutory auditors at the central level, they are required to submit this LFAR latest by 30th June every year. So that means for 31st March 25, 30th June 2025 will be the date. To ensure timely submission of this report, proper planning is required, of course. Yeah. And this LFAR, because it contains a lot of matters, wherein a lot of description, a lot of annexures is required to be given, it's a kind of checklist. So this can become a bulky document at times. So that's why, what will you have? It's always advisable to include an executive summary. Executive summary, you can say, is a summary wherein the important, significant points are given in a summarized manner. Okay, so that the user of that report can get a glimpse. Okay, you can say it's a sort of trailer as to what is there in the detailed document in this entire report. Yeah, clear? Yeah, so executive summary is all about, you can say, key pointers. It's more about a snapshot in relation to the significant points. Yeah, in relation to the key matters. And once again, all of those matters are not duplicated. Why? Because it's all about a summary of that, a brief on that. In detail, that will always be covered in the report. But in the executive summary, you will not have the complete detail. Otherwise, that will become a duplicate. Okay. Yeah, clear on this? Now, as regards audit, we'll get on to that further details as to how the audit is required to be planned, how all of these areas are required to be audited. But before we really get on to the audit, I think a couple of more requirements are important to be understood. Yeah, so what I'll do is I'll just get on to those things first, and then of course we'll have to pick up the audit. Now, as you already understand that before any audit has to be commenced, what is the first thing you need to get into? Understanding of the entity, understanding of the industry, understanding of the economic environment, one can say, in which that particular entity operates. Okay, in fact, so far, most of the discussions that we have had were all around that understanding only today. Yes or no? Now, before getting into the audit, okay, and primarily we'll be discussing about the audit of financial statements only. Yes or no? Yeah, so that's the prime discussion that we are going to have. So that's why it becomes important for us to understand about the accounting system in a bank. Correct? Because if you have to audit the accounts, if you have to audit the books of accounts, till the time you don't understand the process of accounting of a bank, you may not be able to plan your audit procedures around those books of accounts. Okay. Now, for a bank, what is it that you need in terms of your understanding? Yeah. So idea is not to just go through this complete paragraph that you see over here. Yeah. So for a bank, let's try to understand some of the key features or some of the peculiar requirements that you will find in case of their accounting system. Now, considering the fact that the banks have voluminous transactions, so that's why their IT systems are very, very important in relation to the accounting also. Correct? Yeah, because if you have to go audit the books of accounts, you need to have an understanding about the IT systems. So one can say that such IT systems will become important. Okay, that will be a key. For a bank to be audited these days, it's very important to have this understanding about the IT systems. Do you think in today's world, okay, in the environment that we are today, there will be any bank which will be working in a manual environment? Do you think that's possible for a bank these days? Do you think that will be possible? Answer is no, that will not be possible. I'll come to your query slightly later. Priyanshi is saying no, because the volume is such. Yes or no? So that's why you can say this is the most important and striking feature. In fact, this is not really limited to a bank. In fact, to a company or any company that you pick up these days, you'll hardly find manual systems. Everywhere, what do you think? What do you find? IT systems. Yeah, those systems may not be so strong, but the systems are there. Correct? Further, in terms of the systems, in case of a bank, there is again a slightly different feature, and that is about the work on a real-time system basis. These days, when you look at the banks, you are not only operating with the branches. A bank will have hundreds of branches. Yeah, so you may not be only operating with the branches. You may be operating online through net banking. Then you have this mobile banking. Correct? Yeah. So all of these factors, or you can say this entire system, will have an impact on the accounting also. Or as far as the financial statements are concerned, as far as the financial reporting is concerned, one needs to get into the details of all of those aspects as an auditor. Yes or no? Yes or no? So does it mean that all of those physical access to the books, all of those visits to the branches, all of those meetings, discussions with the personnel of the bank will not be required? Answer is no. That will also be required. Okay, because the basic audit approach is not going to change. So we are not saying that all of those aspects will not be involved here. Of course, all of those aspects will be involved. But in respect of all of those aspects, one needs to understand as to how is that required to be approached. Yes or no? How is that required to be looked into? So that is important. Yeah, that is important for one to get into. Clear? Clear? Further, if you look at the banks, because they are highly regulated, they are subject to a lot of regulatory requirements. So all of those regulatory requirements will also have some impact on their accounts. For example, the way income is to be recognized, the way provisioning is required to be done in respect of some of their receivables. Over these requirements, there are some regulations. Okay, and those are not there in case of other companies, means something which you do not find in case of non-financial companies. That is only there in case of a bank. If you look at the accounting standards, if you look at the accounting principles, once again, these are the ones which are prescribed by those regulators. Okay, so if at all there are some changes in the accounting principles which the banks are required to follow, so one needs to understand that. Yeah, one needs to understand that in terms of the reporting requirements, if there is any reporting requirement, if there is any accounting requirement which can have an impact on the outcome as far as financial statements are concerned. Yeah, so that's why an in-depth understanding of some of these requirements related to the accounting system of a bank becomes important on the part of the auditor. Right? That becomes important. Okay. Now, let's try to look at some examples for this. Now, one may be thinking that what are these specific requirements? What are these peculiar requirements? Okay, so I'll just touch upon some of those points now. Income recognition policy. Okay, so for bank, what do you find? The way the income is required to be recognized for a bank could be slightly different. See, as regards the advances which the banks will give to various parties, those advances in some of the cases may not be recoverable. Okay. And in fact, you may have heard a lot about non-performing advances. Have you heard this term NPAs? Okay, many a times you see this in the news that some of the companies have defaulted on the loans taken from the bank. Yes or no? Yeah. So there are defaults. Okay, monies have not been repaid. So the bank have been asking for the repayments. So there are still the defaults. The defaults are persisting. So banks are losing out significantly. Yes or no? Yeah. So what are these NPAs? In a very simple term, you can say, if a bank has given a loan to a party and the other party is defaulting on the repayment. Okay, so there's a default in respect of the repayment by those parties. Then what do you call it as? Those advances by the bank are termed as non-performing. Means they are not able to perform. Their performance has gone bad. What do you mean by performance? Any advance will have to have a performance. Its performance should be good. What do you mean by good performance? Means the principal should be recovered on time. Interest should be paid by the other party on time. Now, what is the meaning of non-performance? If let's suppose the other party defaults on repayment of the principal, defaults on repayment of the interest, and those defaults are continuing. Okay. So in such a case, there are some regulations. Okay. So there are some norms which are prescribed by RBI. So here again, all of these things, where do you get to see that from? RBI. So there are some norms basis which such advances may be classified as non-performing assets or non-performing advances. Okay. Yeah. Now that categorization again is driven by some regulations. All of those regulations one needs to look into. So we are not really getting onto that specific regulation as of now. Important part is what? In relation to such advances which are non-performing, there is a different income recognition criteria. There is a different income recognition criteria. Just give me a minute. 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 Hi, sorry, there was some glitch. So let me just go back. Okay, so now, if let's suppose advances of a bank have been classified as non-performing. Now you may have a question, sir, when do we classify them as non-performing? What are those regulations? As I told you, conceptually, let's understand that. Let's not get into the regulation. Conceptually, let's suppose some of the advances have gone bad. Money is not getting recovered. Interest is not getting recovered. Principal is not getting recovered. So they have been classified as non-performing. Now, in respect of such non-performing advances, a question arises. What will happen to the interest? So, of course, bank has not been able to recover that. But should the bank continue to accrue that in the books of accounts? Answer is no. Okay, so the banks are required to switch from accrual basis of accounting to cash basis of accounting in respect of such non-performing assets. Now you may be thinking, but sir, cash basis of accounting is not allowed anymore. Yes or no? Yeah. So that could be a thought process. So that's where things are slightly different. Okay. Yeah. So that's where things could be slightly different as compared to any other company. Okay. And let's try to understand this as to how this could be a different. So let us just take one example to understand this. So how will this be different for a company and for a bank? Okay. Now, let's suppose there's a bank. Say it's PQR Bank. Bank has given a loan, or you can say advance, to a company. Say the company is ABC Limited. What is the amount of loan? Let's suppose 100 crore is the amount of loan. Okay. So for the bank, this money will be an asset or a liability? Over to you quickly. So for a bank, what will you call it as? This will be an asset or a liability? Great. Tanu says liability, Prem says asset, Shreya says asset. Now this is what you need to understand. A loan doesn't mean liability always. Bank has given a loan. So therefore for a bank, what do you call it as? Asset. And for the company, what will you call it as? Borrowing. Yes or no? Now let's suppose we are in financial year 24-25. Okay. And say this advance. Okay, so this is an advance. Say this is an advance which the bank had given. Now, say the interest rate on this advance was what? 10%. 10% is the interest rate. Now, in relation to a bank, let's suppose during the year, this advance has been classified as NPA. Okay. Now, during this year, 24-25, if you look at the accounting requirement, if you go by the accrual basis, should the bank accrue interest on this? If you go by the accrual, yes. So the bank should be accruing interest. But this being a bank and this being an NPA, bank will not be able to accrue interest. Means bank will not be able to recognize income on this advance. So when does this bank record this income? Only and only when it is paid by ABC Limited. If ABC Limited doesn't make the payment, bank will not be able to recognize interest income. Okay, so for the bank, interest income cannot be recognized. But if you look at the company, okay, so if you look at the company, now what's the company? ABC Limited. For ABC Limited, this loan is payable. Yes or no? For ABC Limited, this loan is payable to a bank, whether the principal is getting repaid or not. Interest is payable to a bank. Interest is also payable. Yeah. So now, for ABC Limited, whether the bank classifies this this loan as NPA or not, should a provision of interest expense be made by ABC or not? Tell me, should ABC create a liability for this interest or not? Shreya says yes. Tanu says yes. Yeah, Almaz is also saying yes. Now in this case, that's where the difference lies. So if you look at the bank, they are not recognizing the interest income. Why? Because they are not allowed to do that. But if you look at the company, they will be required to create the interest liability. Understood? Yeah. So that is where we need to get into the specific accounting requirements. Okay. Which are not coming from the requirements of accounting standards, which may be driven by some of the regulations, which may be driven by some of the norms of RBI. Okay, so all of those factors, all of those requirements are important. Clear? Clear? Everyone clear on this? Yes, quickly. Any questions? Any doubts so far? Any questions? Clear? All right, so now moving further. Okay, so this was about the income recognition criteria. So we discussed as to how this could be different in case of a bank. Okay, how this is required to be looked at. Now, once again, as far as accounting requirement is concerned, financial statements is again an important area. Yeah, because the financial statements are required to be eventually audited by the auditor. Correct? Now, if one looks at the financial statements, so for a company, okay, or for any company, is there any format of the financial statements? Tell me quickly. Do you see any format of the financial statements for a company? Tell me quickly, over to you. For a company, do you see any format? Quickly, I'm sure you must be knowing about it. For a company, is there any format of the financial statements? Where do you get to see that format from? So where does it come from? Great. Tanu is saying Schedule 3. Yeah. So for a company, Schedule 3 prescribes the format. Shreya is asking, sir, what is the reason of not recording interest income? See, the reason is that if you are not able to recover the principal, why do you record interest income? Okay. So idea is to get onto the concept of prudence. Okay. And you can say, try to be more conservative in terms of recording of income as against expense. Now, coming back to the format. Now, for a company, where do you get this format from? Schedule 3. So, be it a company into trading, manufacturing, or any nature of business it may have. So we understand Schedule 3 prescribes the format. Under Schedule 3, you have Division 1 for Indian GAAP, Division 2 for Ind AS. Then for NBFCs on Ind AS, you have Schedule 3, Division 3. Now, banking company or the banks being a company, do they also follow the same format? Answer is no. Answer is no. So you do not have that format of Schedule 3 applied in case of a bank. You do not have that. It's not there. So where do you get to see this format from? And how is that format different? Or do you have any format or not? The answer is yes, there is a format. Okay, this format is also prescribed. This format is again different from the one that you have under Schedule 3. Okay, and this format is also prescribed by the regulations. And because this format is prescribed by the regulations, so that's why it's mandatorily required to be followed. Okay, so where does it come from? So it comes from Banking Regulation Act. Yeah, Banking Regulation Act, which deals with the form and content of financial statements of a banking company. Yeah, so this is also applicable to nationalized banks, State Bank of India, regional rural banks. Okay, so the same format is there for banks. For a bank, every bank is required to prepare the balance sheet, P&L. So you can say the components of financial statements are same. So it's not that for a bank components are different. So there is a balance sheet, there is a P&L. Okay, of course there will be a cash flow, there will be notes. So all of these things you'll have in case of a bank also. But for those components, format is different. And in terms of those formats, various contents which will be there in the balance sheet, the order of that content means various assets which will be there in the balance sheet. Ordering of all of those assets is different from what you see in case of other companies. Okay, so if you look at the regulatory requirement, every banking company is required to prepare balance sheet, P&L in the forms. So these are called as forms. Okay, so the technical term is forms. Forms, you can say, is nothing but a format set out in third schedule to the act. Which act? Banking Regulation Act, or as near thereto. So form A is for the balance sheet. Form B is for the P&L. So that's how it goes. Yeah, so you have a lot of forms, but don't get confused by the forms. By the forms, you simply understand that these forms are all about the format primarily. Okay, so now what I'll do is I'll take you through briefly some of those requirements of the format. Okay, for a banking company, for a bank. Okay, so that you can just get familiar with as to how that is prepared. Of course, we are understanding some of these requirements, but in terms of their financial statements, as to how do they look like. Yeah, so we'll just run through that format. We'll run through that those components quickly. Idea is again not to get into the details, because while we'll get on to the audit details, we'll pick up all of those components one by one, and we'll also be looking at the audit procedures around it. But before moving into that, it's good to have some understanding, some clarity around that. Okay, yeah. So now what I've done is I've just pulled out the financial statements of a couple of banks. Okay, and we'll just try to look into the details of that. Okay, so if you look at this first one, okay, so we have the State Bank of India. Yeah, for the State Bank of India, so we have the financial statements. Now, first is of course the balance sheet. Balance sheet, if you remember, that is Form A. So now, Form A means there's a format which is prescribed. Yeah. Now, if you look at the balance sheet, so in the balance sheet, of course, information is quite similar. But this information is quite specified in terms of the format of that regulation. So it starts with capital and liabilities. So you have capital first, then you have reserves, then there are deposits. Deposit means the deposits taken from various customers. Then the bank may also have borrowed from various other parties, various other banks. Then the bank may also have various other liabilities, provisions. Okay. Then, if you look at the assets, now in case of a bank, whether it's about assets or liabilities, there are a couple of things if you notice. Can you just point out, maybe if you are aware of that, okay, can you just point out some of the differences which you will find if you compare this to the one that you see for any other company? Quickly, any thoughts? Yeah, so there are some differences. Chasing balances with the banks? No, of course, that is a difference. Why? Because that's the nature of their business. Very good. Priyanshi says that in case of a bank, you do not find assets classified into current and non-current. Yes or no? Yeah. So do you have that segregation of current and non-current? No, it's not there. Correct? Dhanush is saying they have cash and balances of RBI, which is there because that's their transaction. And if they have some balances in respect of the transactions, so of course you will have that line item. So those line items may appear to be slightly different, but that's the nature of the business. And of course, you will get more familiar with this as we get into the details of all of them. Any other thing? So of course, one point that you just noticed was about that current and non-current. So that segregation you don't have. Okay, that is not required. So it's not that they missed out. It's not required to be there. So that's one. Do you also notice one thing in respect of assets? Priyanshi is saying provisions are not there. No, provisions are there. So I can see the provisions. So the other thing is, if you look at their assets, so there's a particular order in which the assets are presented. It's in the order of liquidity. So if you look at the assets, assets are required to be presented in the order of liquidity. First of all, you'll have cash and bank balances, most liquid one. Then you have balances with banks. Okay, second most liquid. Then you have investments, third most liquid. Okay, so in the order of liquidity, you have all of these assets, or you can say in the order of liquidity, assets are required to be presented. Yeah, so the ordering, can you understand? So do you find that in case of any other company? No. Clear? Yeah. So why is that important? Because if let's suppose you are auditing the financial statements, this is important for you. This is important for your understanding. Yes or no? Then on the face of the balance sheet, what do you find? You have contingent liabilities presented. Bills of collection. Do you find in case of any other company? No. It's there in the notes to accounts, but it's not presented on the face of the balance sheet. Okay. Then of course you have various notes. Now, if you go to, then of course there is a P&L. So let me just go to this other bank. Okay, so therein we can just look at after the balance sheet. Okay, so if you look at the P&L, yeah, so here again, so the P&L in case of a bank will appear to be slightly different. Slightly different, not in terms of the format, but in terms of the line items. So you do not have revenue, but for the revenue, it's income. In the expenses, it's the interest. Correct? And of course, then you have profit. Then there are a lot of appropriations or transfers. So there are a lot of requirements of RBI or regulations to transfer the reserves to various statutory reserves. Okay, yeah. So this was briefly about some of the specific requirements in relation to the financial statements of a bank that you get to see. Yeah, okay. So now I think we have discussed quite a lot about the banking system, banking environment in terms of their financial reporting requirements. Now, as a next step, what we will do is we'll now move into the audit requirements. Okay, but of course, that we'll do in the next session. But it's very important that when we meet next, so you go through some of these requirements. Huh? Yeah, because it's going to be in a flow. And please remember, banks are quite peculiar in terms of their requirement. Tanu is asking, sir, do we need to learn the format? So I don't think you need to learn. Okay, so over the period of time when we'll be discussing about a lot of these things, okay, so you need to understand this, and while going through some of these things, automatically you will find that you will be able to memorize some of these points, and that should be good enough. Okay, so then I think Shreya has a question. Shreya is asking, sir, we have annexures in the internal audit report, more like working sheets and summary. Do we have the same in the main statutory audit report? Yes, like we discussed, IFC is there. Yeah, so we have that, but you do not have a lot of annexures in the main audit report. You have IFC. So that's the one. Okay. Yeah. All right. Any more questions? Otherwise, what we can do is we can just close our session. No? All right. So thanks for your time and for this wonderful participation today. Thanks so much.
Thank you, Ajal sir. And students, today we have started chapter number 10, the audit of banks. The weightage of this chapter along with the chapter number 9 is 12% to 18%. So if you have any question regarding this chapter or any chapter, you can ask in the chat. Our next class is scheduled on 26th of May, that is Monday, in which we will continue this chapter. So if you can ask your doubts in the chat. Okay, no doubts. So see you on Monday. Thank you, sir. Thank you, students. Yes, you can.